Hey everyone, today is a big day for Initialized. Opendoor, a company we invested in at the earliest stage, begins trading on NASDAQ today. Startups like Opendoor and Airbnb are transforming one of the world's largest markets. Let's go hang out with my partner Kim I. Cutler to talk about what's actually the future of housing, of real estate. How can tech, finance, and cities work together to bring about the society we want to actually live in? Let's get started. Hey Kim, thanks for hopping on. What a day. Man, Opendoor SPAC today.
Yeah, pretty crazy. I mean, this must be a really big deal for you. This is the very first IPO for an initialized company, and you've been following Eric and the team the whole way. So, I mean, if you look back on the early days, how did the company even happen?
Eric's actually, he's someone who has been a friend to me and the firm for a really long time. And he actually sold his last startup to Trulia previously. So he'd been in the real estate market for a while. Honestly, it started with a very simple idea, which was, hey, when people actually buy and sell these things, they tend to use very little data. If you're a software engineer, you realize, oh, there's data. In fact, there's a lot of data. And can we put it into a software system that then actually gives you a dynamic price, one that you can make money on? But where it really became real, I think, was when Eric realized, what if we actually offered it to customers? And if you wanted to sell your home very, very quickly, could you do it through a website? That's what my favorite thing about it. It was a very simple idea, maybe hadn't been executed on the way it needed to be. And once they did it, it started working. I guess it goes to show, like, it's the simple ideas. But it's a good day for real estate tech broadly. And Kim, you are our resident expert, all things housing. How's that been, like, identifying that and then really some of the startups that you've been able to find?
A lot of the rules and norms that attractive metros in this country put in place also happen to make housing more expensive. Transitioning over into the venture side, I've really tried to find tools and products that make housing more broadly accessible to people. And that's manifested in a number of different ways, from Landed, which is helping educators and homeowners purchase homes in really expensive markets, Seattle, Denver, the Bay Area, DC, and Hawaii, and more, to companies like Obodo, which is really making it possible for homeowners to quickly add a secondary unit in their backyard, which is becoming a really important lifeline in the context of the pandemic. Because, when you want to keep your family safe and possibly even separated, or whatever you need to do because you need to social distance, or you're bringing kids home from college because they can't attend school in person, these secondary units are really becoming important places to keep extended family close, but also healthy. And Obodo was able to find out a very fast and quick way to get these housing units into backyards in literally weeks, which, from my experience, having studied the West Coast markets, it's just kind of, actually, it's completely mind blowing, because historically, given all the rules that were set in place around planning and zoning and variances and all this other stuff, if you want to do multifamily projects, it often takes years, sometimes even more than a decade, to get a mid-sized project done end to end. And there happened to be this change, a series of changes a couple years ago in the California state legislature, which is also there's also parallel regulation and legislation happening up in Oregon and Washington as well, that made it really easy to add secondary units. And so that's kind of unlocked the floodgates, so to speak, of people adding these.
Yeah, it's crazy. I mean, San Francisco alone is a $1.3 trillion market with a T, which is really insane. But isn't that one of the big problems? People basically started treating their homes not necessarily as just places they live, but it's actually both an investable asset, but also the biggest component of their net worth.
Yeah, that's the big contradiction in American housing policy. If we had picked a different path, we would be in a very different situation right now. But the path that we took is based off of the Anglo, like British English, model, property centric model, where, housing isn't just shelter, which is an essential need, one of the base essential needs in the Maslow's hierarchy. It's also many households store the vast majority of their life savings in. And so you have this incentive structure where this is just laced into every layer of American society, federal financing, everything, where housing somehow has to be affordable and also has to be a great investment. And you run those two ideas along long enough years and decades, it just doesn't make sense as a contradiction. And I think that's what we're experiencing today, which is, the post-war baby boomer generation, got on the property ladder several decades ago when housing was much cheaper relative to household incomes. And they've been able to ride that property ladder and accumulate wealth through that. But what that has meant in the context of an economy where wages for a lot of the workforce are not moving as quickly as property is that people fall out of the bottom and don't have access to it. And so,
it's
cities
generational now, isn't it?
Right. Yeah. So cities try to compensate for that in a number of ways. And I think, the Bay Area tries to do the right thing. Like they try to do things with inclusionary housing and all this other stuff, but those solutions aren't really scalable.
We also need to build, which we haven't. And then the ADU law has been something that you've been tracking for a while. And now that it's here, it's actually the most ripe way to get perhaps thousands of units per city.
Well, it actually, there's legislation that affects millions of lots. I mean, it's not thousands, it's millions, really. This is what suburban West Coast markets are comfortable with. This is what the electorate's comfortable with. This is what policymakers are comfortable with. So that's what's going to happen. A lot of the bills that we've tried to do around more mid-rise or high-rise along transit corridors has been blocked or stalled, but the laws around adding unit in your backyard have just passed through every year consistently. This is what voters show that they want. And so this is what the broader housing market is going to deliver.
I mean, I think that's why I like Abodu so much. It's for $200,000. You might have a dirt backyard that is literally doing nothing, and you can turn that dirt backyard for $200,000 into something that might actually be worth $400,000 or $500,000, depending on the city it's done in. And it might be a 2-bedroom apartment. That's like unlocking value directly out of the ground. I mean, actually, LA is 2.2 trillion. So it's like, if you take LA and SF, that's 2.2 trillion plus $1.3 trillion worth of housing. And you could increase that housing stock by even 5%. I mean, that's hundreds of billions of dollars in value being created.
I think I would also clarify that, like, people see the sticker price of dirt and they see it and it's looked really high to them. And admittedly, it is high relative to the median cost of a home in America. However, if financed with a home equity line of credit, like the payments on a monthly basis can be, $1,000, $1,100, $1,200, which is, coverable by median rents in the area, even after the pandemic drop. And then on top of that figure relative to what it costs to build a mid-rise building per unit, honestly, it's a third of the cost to build a mid-rise unit in the Bay Area. The price is high, but if you compare it to the alternatives and what's actually politically possible and feasible here, it's on a comparative basis much cheaper.
I think the reframe there is honestly, like, if you look at these cities, they are on par. They are considered world-class cities, at least partially because of the access to capital.
I mean, access to talent is one thing. I mean, cities are like colliders for ideas and ways of living. And it'll be very interesting, obviously, to see what happens in 2021, hopefully, as people can start to return to in-person activities and stop social distancing. I definitely think there's obviously going to be, on a relative basis, more opportunity in other metros throughout the United States. But obviously, I also think there's this, there's going to be this wonderful urgency to come back into the moment and to be with other people in real life.
2021 is going to be great.
I don't want to curse 2021.
Oh,
but
right. You're right.
I'm looking forward. I'm looking forward to it. And yeah.
While tech can only do so much, this is a good example of, if we can actually help unlock several $100 billion worth of value in even 2 of the top 10 most valuable real estate cities.
Yeah, but I mean, obviously, many jurisdictions have this problem. And I also think that more broadly, people are living longer, and families, a lot of the housing that we built throughout the United States is both car-centric and just very centered on this idea of the nuclear family. And it's so obvious now that as parents age, we want to live in multi-generational households, or as markets get expensive, if you want to live near extended family, it's for a lot of people, it's just not going to be possible to get onto the housing ladder in nearby markets and all. And so I have a friend who is in the process, his brother is in the process of building a 2-story ADU in his backyard in the East Bay. And so it's going to be like two brothers living next to each other in two houses. And there's definitely
beautiful.
Yeah, I know. I mean, like, there's no other way that the market here is so expensive. It would be hard. You'd be hard pressed to think of another way for people to do that. But ADUs make it possible.
Yeah, I think that's one of the things that you and I share. We both grew up in the Bay Area, and which is actually relatively odd for tech people. 90% of the people you run across, I think, don't have a link to the San Francisco Bay Area. But that's what makes this so odd. That's one of the sad things, that most of the people I grew up with, either they work in tech now or they had to leave. They moved to the Central Valley, they moved to Sacramento. That's the funniest thing about this Miami stuff. I'm not leaving to go to Miami. It's worth it to me to stay here. I will pay my 7 or 8 figures worth of taxes because it's actually worth it. This is my home, and I want those tax dollars to actually go to my community, and this is my community. I'm from here, and this is where I want to stay.
I'm of several minds about it. I think it's a good thing if the industry is more broadly accessible in more metro markets in the United States. And at the same time, I'm third generation here, and this region has done so much for my family that I feel very emotionally tied to it, and I want it to continue thriving and prospering going forward. I feel both things at the same time.
Our hope is that it'll create a really great billion-dollar business that employs thousands of people as well as housing people.
I feel really excited. I feel excited about companies like Abode are not just positioned to add just a little bit of more housing on the margins. They're actually positioned to add a lot more if you consider like the legislative changes that are on the horizon. And then I couldn't
thousands
imagine
of units is 1,000 families that can stay in the Bay Area or LA.
Yeah, or more. Healthcare workers, like they're partnering with healthcare organizations and hospitals, and starting in the Bay Area, but eventually across the entire country. Like, I couldn't imagine a more meaningful thing other than, helping nurses with down payment assistance so they can afford to stay in the markets that they serve, that they've like so valiantly served this year. And then on top of that, like cul-de-sac, they're actually doing it. They're building car-free cities and car-free neighborhoods in the United States in places that have historically been incredibly car dependent. So I honestly don't think
Open Door
these things
alum
are
too, Ryan Johnson.
Exactly. There's definitely a pathway towards making some really profound change in all of these spaces. So I'm pretty excited.
I guess I'm just deep down sensitive to tech because I'm from tech. It gave me everything I had. I'm also extremely aware of the unintended consequences of tech, in society. And I think we do have a responsibility to other people. I
totally agree with that. And yet at the same time, like I've also really thoughtfully picked companies that I can feel, in terms of the client base that Landed has, it is much more representative Black, Latino, and non-white buyers than many other housing companies, in part because public sector work is much more representative. I've been very picky about what I do, and so I don't feel like apologetic or sensitive about it because I know that I've picked teams that think about these things from the core.
Well, I'm glad that we can that actually be a part of our conversation about how we decide what companies to fund. And one thing I've always really appreciated about you, Kim, is that as companies come into Initialized, I can always count on that perspective, which keeps us real and sort of grounded in a way that I would like to see all of tech really spend more time and be thoughtful about what is our impact on society, and does this investment put us more towards the world that we want to live in or not? Well, thanks for hanging out.
Thank you. Lucky to be here.
Psyched to be working on this and many other companies with you.